Welcome to Talker Tickers. Today, we're digging into Acuity Brands, ticker AYI. And let me tell you, their latest report is a fascinating one, revealing a company right in the middle of a massive transformation that the market is definitely starting to notice.
All right, let's jump right into the Q4 snapshot. And honestly, at first glance, these numbers were a bit of a head-scratcher for the market.
So you've got this classic tug of war, right? On one side, you have adjusted earnings per share just rocketing up 21% year over year, a really solid beat. But then on the other side, you've got revenue coming in about $20 million shy of what everyone was expecting.
Okay, so let's put some hard numbers to that. Adjusted EPS, it came in at $5.20, easily clearing the $4.87 consensus. Revenue, like we said, landed at $1.21 billion, just a hair under the $1.23 billion Wall Street was looking for. But here's the kicker, the number you really need to pay attention to, that adjusted operating margin. It expanded by 130 basis points to 18.6%. That's a huge tell for what's really going on under the hood.
So how did the market react to this mixed bag? Well, despite that revenue miss, the stock just took off. It rallied over 5% on the day, and get this, on almost 3 times its normal trading volume. So clearly, investors were keying in on something else, something much more important.
Which leads us to the big question, right? What exactly did the market see that top-line revenue number was hiding? Because this reaction, it tells you that the smart money wasn't focused on the miss at all. They saw a much bigger and, frankly, a much more exciting story playing out.
And that story, that answer, it all comes down to the two very different worlds operating inside Acuity right now. You've got their classic legacy lighting business, and then you have this new high-flying Intelligence Spaces division.
Yeah, this number right here. This is what lit up the conference call. The Acuity Intelligence Spaces segment, they call it AIS, saw its sales just explode. We're talking a 204% increase from last year. Just wow.
And this chart really lays it all out, doesn't it? It's like a tale of two companies. You have the lighting business, ABL. It's the big, steady ship, right? Raking in almost $1 billion in sales, but growing at less than 1%. It's the cash cow. But then you have AIS. Fueled by that recent QSC acquisition, it's become the undeniable growth engine for the entire company. It's not even a contest anymore.
And this isn't just a happy accident. This is the plan. The CEO, Neil Ashe, was super clear about this on the call. He said they have a different theory of the case for AIS. They're not just selling speakers and screens. No, the end game is to consolidate the data state of a built space. Think about that. They're moving from being a simple manufacturer to a tech company that runs smart buildings.
And here's the best part. This big strategic pivot, it's already hitting the bottom line, hard. The move away from lower margin lighting products and into this higher value tech is exactly what's driving that massive margin expansion we saw earlier. It's the secret sauce.
So with that transformation story as the backdrop, management stepped up and gave guidance for 2026 that pretty much ripped up the old playbook and set a whole new level of expectations. I mean, look at this. The outlook was incredibly bullish. Management is now calling for full year 2026 earnings per share somewhere between $19 and $20.50. And that top end, that 2050 number, was way above what anybody on the street was thinking. They just raised the bar big time.
So how are they going to get there? Well, the math is pretty straightforward. They're planning on the lighting business to just keep chugging along with that stable, low single-digit growth. Meanwhile, the Intelligent Spaces business is expected to just keep compounding at a really strong low to mid-teens clip. That's the 1-2 punch for creating shareholder value. Okay, so that brings us to our final segment, the next call. This is where we put it all together and give you our take on where the stock goes from here. So after you digest the quarter, you look at that incredible guidance. Is Acuity a compelling buy right now? We think the answer is becoming pretty darn clear.
You know, when you stack up the bull and bear cases, the bull side just feels heavier. The bull case is all about that AIS growth story, right? The margin lift and the potential for the stock's multiple to expand as it becomes seen as a tech company. The risks, well, they're always there. A big economic slowdown could hurt everyone, or maybe they stumble on integrating that huge QSC deal. But in our view, the potential rewards here just seem to dwarf the risks. This transformation isn't just talk. It's happening, and it's happening fast. You can see it in the numbers. And for that reason, we are initiating coverage with an outperform rating. Look, our thesis here is pretty straightforward. Acuity is pulling off a really impressive evolution. They're going from being a kind of boring, cyclical industrial company to a much more exciting, higher multiple building technology platform. The market is definitely starting to catch on, but we don't think the stock price fully reflects just how big this change is. And that's where we see the opportunity.
This is not financial advice.